Welcome to The Voter's Voice, where we lay out the bills and you decide if they make sense.
Today, we're plunging into a situation making basic property coverage incredibly difficult for millions of California homeowners. A spiraling wildfire insurance crisis. It's really a complex, challenging problem, and we're here to understand one crucial piece of it. Our mission today is to unpack California Assembly Bill 1, or AB1. Now, this isn't a standalone fix, but it's a proposed law aiming to address vital aspects of this crisis. And it's intimately connected to a much larger regulatory overhaul. We'll explore AB1's specific mechanisms, its intended benefits, its crucial limitations, and how it fits into California's broader strategy. We'll be drawing from expert legal and policy analyses, official government documents, industry reports, basically giving you a comprehensive understanding of what's really happening. Let's dive in. So to really grasp the significance of AB1, we first have to set the stage. We're not talking about, just a few bad wildfire seasons. This feels more like a systemic failure, wouldn't you say? It's really paralyzed California's homeowners insurance market.
Oh, absolutely, especially in those communities most vulnerable to wildfire.
Yeah, it's an availability crisis, right? Mm-hmm. And the ripple effects are just immense.
You've hit on a critical point. What we're witnessing isn't simply an unfortunate turn of events. It's what analysts are calling a tripartite failure.
Tripartite failure, okay.
Yeah, like a perfect storm of three interconnected factors coming together. The first, and maybe the most foundational, is California's legislative framework, specifically Proposition 103.
Right, Prop 103. That goes way back, doesn't it?
Exactly.
1988.
Exactly, 1988. Voters passed it, and it set up this prior approval system for setting insurance rates, meaning the state basically dictates how much insurers can charge.
Okay.
And crucially, it forced them to use a 20-year backward-looking average of historical data.
20 years backward in today's climate.
Precisely. The fundamental insight here is that this system, it detached premiums from the actual evolving risk. It made it, as some analyses put it, financially impossible for insurers to operate without a loss because they just couldn't price accurately for these escalating future risks.
That sounds problematic.
It is. And the second factor just makes it worse. That's the dramatic intensification of the wildfire peril itself, directly fueled by, rapidly changing climate conditions.
Right.
This has just brutally exposed the vulnerabilities of that Proposition 103 framework. I mean, the frequency, the severity of wildfires, it's accelerated at a startling pace. Just think about this statistic. 8 of the 20 largest fires in California's history have occurred since 2017.
Wow, since 2017, that's incredibly recent.
It is. And it makes those historical-based pricing models, the ones mandated by law, pretty much obsolete. The past, in this scenario, is just not a reliable indicator of what's coming.
Okay, so you have the outdated regulations, the worsening fires.
Yeah.
What's the third part of that failure?
The third part is the long-term trend of human development. We're expanding deeper into what's called the Wildland-Urban Interface, or WUI.
The WUI, where homes meet wildlands.
Exactly. You're putting more properties directly in harm's way. And there's a compelling argument, too, that those artificially low insurance prices, a direct result of Prop 103, might have inadvertently incentivized this high-risk development over decades.
Because the true cost of living there wasn't reflected in the insurance bill.
That's the argument, yes.
So if I'm summarizing this right, it sounds like the core issue isn't that wildfire risk is flat out uninsurable. It's more that the state's regulatory system stopped insurers from pricing that risk correctly.
Precisely, yes.
And that forces private companies to basically say, we can't operate here, reduce their footprint, pull back.
Which leads directly to this huge availability crisis for you, the homeowner. You've captured the core challenge. And to give you a sense of the scale, the numbers are pretty stark. We're talking more than 2 million households. That's like 1 in 4 across the state in higher or very high fire zones.
1 in 4.
Yeah. And look at the California Fair Plan. That's the insurer of last result, right?
So you can't get private coverage.
Exactly. Its policy count has just exploded. It jumped from about 203,000 policies to 452,000 in just 4 years.
Doubled. More than doubled.
More than doubled. And what's really concerning is the acceleration. A 41% increase just between September 2023 and 2024 alone.
Wow.
The private market is pulling back hard. Since 2022, 9 out of the top 12 insurers in California have restricted new business.
9 out of 12, that's a massive retreat.
It's a significant withdrawal, yeah.
That's just astounding, seeing those numbers climb so fast. So, okay, faced with a systemic failure this big, how does the state even start to fix this? It feels overwhelming. I know we've heard about Insurance Commissioner Ricardo Lara's sustainable insurance strategy. People are calling it a comprehensive set of reforms, even a paradigm shift since Prop 103. What's actually in this strategy? How is it trying to lure insurers back?
That's the central question, isn't it? And Commissioner Lara's sustainable insurance strategy is indeed the state's big answer. It really is aiming for that paradigm shift you mentioned. It directly confronts Prop 103's limitations with 4 core provisions. First, and this is huge, it will allow insurers to use forward-looking catastrophe models to price risk.
Okay, so not just looking backward anymore.
Exactly. Premiums can finally reflect future risk, not just historical data, making them more aligned with the realities of our changing climate.
That makes sense. What else?
Second, the strategy lets insurers include the cost of their own insurance. It's called reinsurance in their rate structures.
Insurance for the insurers.
Pretty much. It helps them spread catastrophic risk and ensures they have enough capital to actually pay claims after major events. It's a crucial solvency backstop.
Okay.
The third provision, this involves a pretty significant legal shift. Insurers have committed to writing policies in high-risk areas, equivalent to no less than 85% of their statewide market share. It'll be phased in over time.
So they get the better pricing tools, but they have to promise to actually write policies.
You got it. It's described as a carrot and stick approach. Give them the tools, but get a commitment to insure more homes. The goal is tackling that availability crisis head on.
And the fourth piece.
And finally, the strategy explicitly integrates the Safer from Wildfires regulations. These regs provide a detailed menu, basically, of mitigation actions homeowners can take.
Like chlorine brush or home hardening stuff.
Exactly. Simple things, bigger structural changes. And taking these actions can earn you discounts on your premiums. And this is the key regulatory link to Assembly Bill 1, which we're focused on today. It ensures those mitigation measures stay relevant and effective.
Okay, that brings us right to AB1 itself. So the sustainable insurance strategy is the big picture, setting up these Safer from Wildfires rules. Let's drill down now into AB1 specifically. How does this piece of legislation actually, formalize and drive those mitigation efforts? What does it require?
Right. So AB1's key legal requirements are primarily procedural. They focus on institutionalizing a formal, ongoing review process for those wildfire mitigation regulations. The central mandate is this. On or before January 1, 2030, and every 5 years thereafter, the Department of Insurance, the DOI, shall consider whether to update the existing Safer from Wildfires regulations.
Okay, consider updating, not must update.
That's a really important distinction, yeah. The emphasis is on consider, not a direct mandate to amend. It hints at the political realities involved.
Gotcha. So it sets up a review cycle. What else?
Well, as part of this review, the DOI has to consult with other key state agencies. We're talking the Office of Emergency Services, OES, Wildfire, the Public Utilities Commission, PUC, the Office of Planning and Research.
Makes sense. Get all the experts involved.
Exactly. It's crucial to ensure any measures they consider are scientifically sound, align with what else the state is doing on fire safety, land use, and so on. The bill also mandates a multi-step public participation process.
Public input, okay. How does that work?
It involves holding public meetings for suggestions, putting out a preliminary list for people to review and comment on, and then making a final list public before they start formal rulemaking. And if that final list goes public, the DOI has to kick off the rulemaking process within 30 days. For instance, the regs are specifically told to consider things like non-combustible construction materials from the state fire marshal's official list.
Okay.
So the key insight here is that AB1 meticulously builds a process for future adaptation and public input. But critically, it doesn't mandate what changes have to happen or guarantee they deliver immediate relief. It's about updating the playbook for the long game, not winning today's game right now.
Okay, so setting up a process for regular updates involving experts, getting public input. On the surface, this sounds like a pretty sensible step. What are the main arguments for supporting AB1? What are the benefits proponents are pointing to?
Yeah, from a policy standpoint, AB1 definitely offers several compelling benefits, all aimed at creating a more resilient California in the long run. Firstly, it really champions regulatory adaptability. This bill institutionalizes a mechanism to stop California's wildfire mitigation rules from becoming, decades old and outdated again, like we saw contribute to the current mess.
So it forces a refresh periodically.
Exactly. By mandating that regular review, it creates a formal legal channel to bring in new science, advanced building materials, evolving community strategies. It's a forward-looking approach.
Okay, adaptability. What else?
Secondly, it powerfully incentivizes homeowner action. AB1 reinforces that core safer from wildfires principle. Homeowners who take real steps to reduce their risk should get rewarded with premium discounts.
Makes sense? Action equals reward.
Right. And continuously updating that list of approved, scientifically backed measures gives people a clear, powerful, market-based reason to invest their own money in hardening their properties. And when you aggregate that across a community, those individual actions can seriously reduce the overall wildfire danger and therefore the insurable risk.
Okay, so adaptable rules, homeowner incentives, any other big pro arguments.
Then thirdly, it encourages insurer participation, or at least that's the hope. By creating a legal framework that should, over time, produce a more resilient, lower-risk portfolio of properties, AB1 provides what's called a critical carrot for insurers.
A reason for them to come back.
A legitimate, data-backed reason to return to the market, hopefully, and expand their underwriting, which in turn helps tackle that availability crisis and reduces the crazy burden on the FAIR plan, which, like we said, is just seeing unprecedented growth.
Those are definitely compelling arguments for AB1. Framing it as a necessary step towards, a more stable, resilient market. But, some might argue simply promoting regulatory adaptability isn't enough. What if the political will isn't there to actually implement updates, especially if they cost people money? What are the counterarguments, the challenges, the potential downsides of AB1 that critics are pointing out?
That's a crucial question, absolutely. Because while AB1 is seen as a positive step, its effectiveness is definitely constrained by its design and the broader political context. Probably the most significant weakness that analysts point to is its timeline.
The 2030 start date.
Exactly. The first review isn't until 2030. That means the bill offers no direct or immediate relief for the crisis happening right now. I mean, imagine you're a homeowner getting non-renewed today. AB1 does very little for you in the short term.
Yeah, that's a long time to wait if you can't get insurance.
It presents a huge strategic problem. The market could get even worse, more Californians could lose coverage before AB1's process even starts to yield results. It signals long-term reform, not urgent response.
Okay, so timing's a big issue. What else?
This leads to another critical point. AB1 is essentially a micro fix for a macro problem. It focuses on improving the data that feeds into the regulatory process.
Mitigation standards.
Right, but it doesn't address the underlying regulatory mechanism, that's Proposition 103's prior approval system, that makes it hard for insurers to actually use that updated data effectively in setting their rates.
So you can have better data, but if you can't use it to charge appropriately.
Exactly. Its success is entirely dependent on the insurance commissioner's political willingness to approve higher risk-based premiums. Even with perfect, updated data from AB1, if the commissioner hesitates politically to approve rates that fully reflect that risk, then the bill, it fixes a procedural problem, but not a political one.
And we've seen that political pressure be intense around rate hikes.
For decades, yes. The fear of consumer backlash can often override the actuarial math.
Okay, so timeline. Doesn't fix the core rate issue. Any other big concerns?
And then there's the risk embedded in that public participation process.
You mentioned that earlier. Transparency sounds good, but...
Well, while it's intended for transparency and inclusion, you have to consider the history. Consumer groups have acted as powerful interveners in the Prop 103 process for years.
Meaning they actively challenge rate changes and regulatory decisions.
Yes. So these public meetings required by AB1 could easily become a venue for, say, anti-rate hike protests or for challenging potentially costly new mitigation measures. You can picture passionate community meetings where every proposed update is scrutinized not just for how well it works, but for how much it might cost homeowners.
Which could lead to delays and gridlock.
Potentially significant delays in bureaucracy, yeah. It could end up impeding the very updates the bill is trying to institutionalize. It's a real double-edged sword. Transparency is good, but it can also be used for political obstruction.
That's a really sobering assessment. It highlights how even, well-intentioned laws can hit major roadblocks. So that brings us to the bigger picture then. How does AB1 really fit with that larger sustainable insurance strategy? And what does this all mean, tangibly for individual homeowners in California? It sounds like a tricky balance.
Yeah, stepping back to that broader context, it's super clear AB1 isn't a standalone fix.
Yeah.
Not at all. It's best understood as a critical appendage to Commissioner Lara's wider sustainable insurance strategy, the SIS. Maybe think of it like this. The SIS provides the engine, right? It allows insurers to use those forward-looking models, include reinsurance costs, to better price the risk.
Okay, the engine.
And AB1, in turn, provides the fuel. It's the legal mechanism to make sure the data feeding those engine models, the list of approved, effective mitigation measures, stays current and scientifically sound.
Fuel for the engine. Got it.
They really have to be evaluated together as a single holistic reform, because without AB1, those SIS models could get stale with outdated mitigation data. And without the SIS's regulatory changes allowing better pricing, AB1's updated data wouldn't have much practical impact for insurers anyway. They're truly interdependent.
Okay, so they need each other to work. What's the big implication of this whole shift then?
A really critical implication of this whole package, AB1, as part of the SIS, is how it fundamentally reallocates financial risk.
Reallocates risk. How so?
Well, previously, risk was largely socialized, you could say. Suppressed premiums meant insurer shareholders often absorbed losses, or the growing FAIR Plan spread costs across all California policyholders.
Right.
AB1, if it works as intended with the SIS, shifts more of the burden of risk reduction directly to the homeowner. It provides those market-based incentives we talked about, the premium discounts for individuals to invest their own capital in mitigation.
So the state is basically saying insurers get big tools, but homeowners, you need to reduce your own risk, and it's going to hit your wallet if you don't.
That's a pretty accurate way to put it, yeah. Your actions or inactions will more directly impact your premiums.
Which brings us to affordability, right? Because that mitigation isn't cheap.
Exactly. This leads to a huge and maybe underestimated affordability challenge. The cost of doing a comprehensive home hardening, things like a new Class A fire-rated roof, ember-resistant vents, multi-paned windows, that can be prohibitively expensive for many people.
But we're talking tens of thousands of dollars potentially.
Often, yes. We hear stories of homeowners facing these agonizing choices between, say, fixing a leaky roof and doing these major wildfire upgrades. And this could unfortunately create a real affordability divide, a key policy gap, because the bill itself provides no direct funding mechanism to help vulnerable populations or folks on fixed incomes make these changes.
And what about underinsurance? Does it touch that?
It doesn't directly address the widespread issue of underinsurance, no. That's where people are already insured for less than it would actually cost to rebuild their home. That complicates recovery immensely after a fire, and AB1 doesn't fix that baseline problem.
So summing up the trade-offs, homeowners get a clearer path to discounts, but have to foot the bill for potentially expensive upgrades with no immediate relief from the current crisis.
Right. Insurers get better data and potentially more resilient properties down the line, but still face regulatory hurdles and political fights over actually using that data for rates.
And the public. Maybe less reliance on disaster aid and the FAIR Plan eventually, but maybe facing surcharges if insurers don't fully come back.
That's a good summary of the complex web of trade-offs involved, yes.
So it really sounds like AB1 is, okay, well-intentioned, probably necessary legislation. It gives that crucial data updating mechanism for the bigger strategy. It's a foundation piece, a key ingredient maybe, but ultimately it feels insufficient on its own. It's addressing a vital procedural symptom, but maybe not all the root causes driving this crisis.
That's a very accurate summary, I think. And for you, the listener, understanding this really means long-term planning is going to be essential. The state is clearly, unequivocally moving towards linking risk and premiums much more directly. So proactive home hardening, using those safer from wildfires regulations as your guide, that's going to be critical if you want to secure affordable insurance coverage down the road.
But it won't help right now if you're struggling.
Exactly. AB1 offers no immediate relief. So for those of you facing non-renewal today, or just crazy high quotes, you might need to look at alternative insurance markets, things like excess and surplus lines, or engage directly with the DOI's existing processes for non-renewal to understand your options.
Okay. What else should people keep in mind?
Also, just be prepared for a potentially contested regulatory landscape, that public participation process we talked about.
Yeah.
While it's designed for transparency, it's likely to be contentious. You should expect consumer groups to potentially challenge new regulations that could lead to higher costs or require expensive mitigation. It could get bumpy.
And finally,
keep a very close eye out for related legislation. Since AB1 doesn't include direct homeowner funding for mitigation, watch for future bills. things proposing grants, tax credits, other financial incentives. Those will be crucial next steps to address the financial burden this shift places on individual Californians. This story is definitely still evolving.
As California really confronts these escalating realities of climate change, this whole deep dive just reveals this incredibly intricate dance, doesn't it? Between the environmental challenges, these old legislative frameworks like Prop 103, powerful market forces, and ultimately individual responsibility. It really makes you wonder, what does this mean for the future of risk allocation? Who ends up bearing the burden when disaster inevitably strikes? And how will society manage to balance building resilience with maintaining equity when the costs of adapting are so high? It's a question we'll all need to grapple with here in California and certainly far beyond its borders.
Hope you enjoyed this episode. Tune in again to make sense out of all the bills.